Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good. Everybody, welcome to this Wednesday edition of PreMarket on in and guys from my mic there. Let me all right, I'm with you now. Sorry about that, folks. Spencer Israel here with Joel Elconin and Dennis Dick, running through a few different things happening today, not the least of which is a quiet market. Not a lot going on in this market. We have some earnings on our radar, but other than that, it's really, really quiet out there. So we'll just kind of run through the movers from yesterday, movers from this morning. We take questions from our chat as well. Also, new thing we're going to start trying starting today. I've set up a Google Voice number. And of course, we have the chats going throughout the show if you want to ask us questions there. But if you want to ask us questions, if you want to call us and actually say your question, you can do that too. Give us a call at 734-494-0246. That's a Google Voice number. You can leave a voicemail, say your name so we know who you're talking to. Leave us a voicemail and we can play your voicemail on the air and address your question and talk about it that way. So if you're in our chats, that's great. It's a real-time Q&A platform right there. But if you want to call us up and leave us a voicemail anytime, you can also do that. So again, 734-494-0246. Leave us your name, ask a question, and maybe we'll play it on the show and talk about it there. So long show today. We're doing the bonus hour with Sean Udall. So we got a few guests. The first guest will be at 8:35. That'll be Gil Morales. He's the author of the Gilmo Report and the managing director of Mocha Investors. And then we'll bring Sean on at 9 a.m. And then at 9:15, we'll be joined by Robin DeShays. She is the president and chief strategy officer at Miltonian Capital Management. And she will talk to us about this news in PG&E. We talked about this a few days ago. They came to the settlement agreement last Friday. And she'll talk us through what that means going forward for the shareholders, for the company, for the victims, all that stuff. That'll be at 9:15. So a lot to get to today. Joel, what's the word here in the overnight session?
First of all, Spencer, I think it's 9:45 I have on the calendar. Could you double check with her during the show here? I gave her the option because Robin's out on the West Coast, and I think I said 9:15 or 9:45.
I'll check with her then. How about
okay,
that?
Thank you. Quiet day, but we're in the green here. Nice range overnight. You had a little dip at 6 o'clock. Caught support kind of where you did near the end of the session yesterday. That's 31.2950. That's just below your daily pivot. There's the gateway to any downside in the market today. Below that, Thursdays and Fridays low, 17 even is your huge number on the downside, pair of lows there. On the upside, we took a peek at Tuesday's high, 31.43. We got through it by 2 ticks. It was a real quick spike around 3:30 in the morning. I wasn't up for it, and then we pulled back. But above 31.43, folks, you got to look for those highs from Friday and Monday, 31.4950 and then 31.51. Big levels on the upside. Of course, that all-time high, 31.58. Crude on the day of the Saudi Aramco IPO, which according to Spinner has surpassed Microsoft and Apple in market cap here. But crude down 29 cents at the top of the range. 58.95 is your last print, high at 59.17. I guess $60 even. That would be a big level, big psychological level. Gold, that's positive by 220 at 1470.30. Silver going the opposite way, down just a little less than a penny at 1689.5. And I don't know, I'm ready to give up giving Bitcoin levels again here since it's not moving. The futures are up $55 at 7,270. I know Triple D was getting a late start this morning with.
Yeah, I was going to say he's with us. Oh, you are here. Okay.
Yeah, I'm just waiting for you to start my video.
Oh, okay.
Mr. Israel says, "Oh yes, now he says I can."
I didn't realize you were here with us, Dennis. I mean,
Spencer has all the power.
I knew you were here.
I say start the video, and it says you're not allowed to start the video because Spencer
And
Israel has the power.
you know what, Dennis? You got sick kids. I got a sick dog.
What's wrong with your dog?
I don't know. I had to take her out like 3 times in the middle of the night last night, and it was pretty
What was she
darn
doing?
cool.
Just had to go to the bathroom?
Yeah,
Got
I
the
don't know.
scoots?
Perry's never done that before. I'm a little bit worried, but I
Yeah.
don't know. Might have to take her to the vet today. But sick kid, there's nothing worse than a sick
No,
dog and a
you
sick
told me
kid,
that.
2
I think
sick
about
kids.
that all the time. You said there's nothing worse than having a sick kid, and you know what? And last night, so I took both kids to the doctor yesterday. My daughter's doing well. She's kind of beating the fever. The boy's been spiking a fever for 5 days. Last night we were spiking up to like 41 degrees, which is just scary. So you give them the Advil and it comes back down. 41 Canadian. I don't know. It's like
No, I know. I was actually going to ask.
it's like up. It's like as high as you're supposed to possibly go before you call the ambulance. So really scary. I give him the Advil, comes back down. 3 hours later, just spikes back up. So we're just managing it. I did take him to the doctor yesterday. He doesn't have anything. Like his lungs were good, his ears were good, his mouth is good. He says it's just viral. It's got to run its course. But man, wicked fever with it though.
Yeah.
So hoping he gets better here today.
Nothing
Been
worse
off
than a
school for
sick
3 days.
kid.
It's the worst.
Two sick
That's why
kids.
if I look exhausted, I am up all night, off and on with the kid with the flu bug here going around. So yeah, nothing worse, Joel.
But you had time to get a haircut.
I did yesterday. Look at that. You noticed. Thanks for noticing. Because everybody made fun of my hair for so much, I had to go and actually get a haircut. I was getting self-conscious about it. I was like, I was going to fly away on these wings that I had, these sideburn wings that were going. Yeah, I was just going to fly away one day. So anyway, so I'm good now. The hair is good.
You know what? I mean, obviously, we're talking about all these things because the market is extremely quiet here on Fed decision day.
It is, and the market has been quiet here for most of the overnight session. I mean, we were down slightly. Now we're starting to crawl up there. So is this the calm before the storm? Because obviously we're going to get some fireworks here with the Fed. What do you think they're doing? What's your opinion? Well, we should throw it to Spencer. What does the consensus say that they're doing here today?
Yeah,
I don't think anybody thinks they're lowering rates.
No,
it's all about
the
wording.
I don't know where you get. Obviously, we're gonna get fireworks from because I would say quite the opposite. I don't think we'll get anything.
You don't think we're gonna get anything? You think it's gonna be like wah, wah. There's gonna be no movement off it at all?
There's a 97.8% chance that rates remain unchanged. So or stay unchanged. So no, I mean, I think I don't know.
This. I mean, this is already determined. We talked about this after the jobs number on Friday. I mean, rates are.
It's not. But it's not about what they do with the rates here.
Right,
it's going to be about the language going forward. What are they seeing? Are they seeing the potential that hey, we're going to need to cut rates again? If so, the banks will get hit. If they see, no, we're like going into like this neutral stance where we think we're good, then obviously, you can look at the TLT and the banks, don't want to hear anything that, the rates are going to go lower. So, keep an eye. And if you're getting any indications from what the market has done coming into this, I mean, the banks have held up very well. They're near their highs. JP Morgan got a downgrade yesterday, shrugged it off, and they bought it all day. It opened right at the low on the downgrade and ran, over $1.50 back to close green. So the money managers are saying that, the rates aren't going up anytime soon. And the money managers are also saying that they're not going to all of a sudden, get in the language that they're going to raise rates or they're going to lower rates anytime soon.
Correct.
Because the banks are performing very, very well. And the TLT has been weak too. So, if we just look at the TLT chart for the last 90 days, same story. We've been kind of going from the upper end of the chart to the lower end. They're on the lower right from the upper. I'm tired here, but you can see we're definitely in a downtrend in the last 3 months. So that's saying the same thing too. So as long as the market kind of holds to, what the market, obviously what the Fed holds to what the market is thinking, then, maybe we won't get the fireworks. If for whatever reason they hint that rates could go lower again, you will see some fireworks. So, or if they go the other way, and I think they're going to be neutral stance, and that's where you're not going to see any fireworks at all.
Yeah, Spinner mentioned Gordon Gunlock's going to be on. He's been saying rates have been are going up for like, I don't know. He's been calling for the end of the world for I don't know how long. So I don't know how much stock I put in his opinion.
The Fed's
Uh,
so spooked to raise rates for
yeah,
two
they're not
reasons.
raising
One
rates.
is they saw what happened last December when they started raising rates. The market collapsed. Two, they're scared for their jobs because Trump is breathing down their throats saying you got to keep the rates low. So that's why I don't think, there's any chance they're going to go all of a sudden hawkish here and we're going to start to, look at, hey, we might need to raise rates here. I do not think that is the case. I worry that their language could be too dovish. So, and that could actually impact the banks. But in any regard, the Fed is on the market side. We saw that, that they last December. We've seen it throughout this year that the Fed is going to defend the market no matter what. And that's why it's hard to really get bearish. I mean, you see a lot of people, even people coming on this show, preaching the end of the world or preaching, that we're eventually collapsing here. Well, sure, eventually we come back down. Eventually we'll have a stock market correction. Eventually we'll be back into a bear market. But you could have been saying this for the last, 2, 3, 4, 5 years and missed out on a lot of gains. That's why I stay almost fully invested because I don't see anything, any reason. Trading's a different aspect, but if you're a long-term investor, should you be jumping out here because we're at, 3,000 on the S&P or 3,100 and we've had a big run? If you look at the forward PE and you're at 19, I mean, it's to the upper end of the range, but it's not crazy. It's not like we're valuations just so extreme that there's not room to the upside. I think quite the contrary. If rates are staying low, where is money going to go?
I agree. I agree on that. Before we cover some of the after hours stocks, did you see any of the intraday action? And we were asked about Peloton. And what did Mr. Left have to say about Peloton? He wasn't very kind to Peloton shareholders yesterday.
Yeah,
Did he call it a treadmill with an iPad attached to it?
No.
Like I haven't been kind to them at all either. Been wrong.
Haven't talked about Citron research for a hot second on this show, but the headline for him was investors peddling themselves into a frenzy. His 2020 price target is $5.
2020?
That's what he said.
That's aggressive. I will say.
That's aggressive, yeah.
That's aggressive. I will say I've been bearish Peloton, and I've also said that I think the stock could be significantly lower in 2020. I was saying this when the stock was $27. It went to 21, and I look like a genius. I didn't get off the bear train, and now it's up here at 35, and I look like an idiot. I will still say that this is a story stock right now. The story is not broken here yet. The story is still hot because you're in the season for the story to be hot. Think about it. You see how many commercials on these things. There's going to be a lot of these things bought over the holiday season. You have New Year's coming. So, where everybody's going to do their New Year's resolutions. Is people going to buy these things? Joel's wife might buy one of these things.
We did. We bought
Oh, you
one.
did? You did buy it. You were
We're
talking
long.
about buying
Yeah, no position.
You did buy it.
We did buy it. We did buy it over the weekend.
So there you go. So there's going to be people who are coming in here and buying it. With that being said, I think, the next spike up, if they have a good report. When do they do to report? Is it February? It's a ways, isn't it? They already reported this quarter,
Yeah,
right?
they just reported, didn't they, Spencer?
Yeah. So I think it's like February. But I think those numbers could be good.
They haven't even given a date yet, I don't think.
I think they're going to have a really good season. I think that's going to be the selling opportunity. When this thing has, goes up and has a really good numbers, I think that's going to be it. I think that's going to be the top. So I'm saying, from a seasonality perspective, maybe look at this thing in February. I think you're way early. I think if you're shorting it now, I think you're early. Maybe I'm wrong. The valuation makes no sense. I agree with Citron. I don't know if I agree about a $5 price target, but I think it's significantly lower by the end of 2020. So, but I don't know where it's going to go to here yet. So I'm not coming in here and shorting ahead of the season because I think the numbers are going to be really good for this. I'm going to get excited to short this thing. Same thing goes with Roku. So Roku, I think, is going to have a great season too. But Roku kind of solves, in my opinion, still just a temporary problem. I know you can say that they're going to have the technology into the smart TVs, but everybody's going out there and buying a Roku right now, or people like me who don't have a smart TV yet and don't have the capabilities, like, oh, one of my TVs isn't smart. And they're going out there and buying the stick to solve the problem so they can stream. Once all the smart TVs, once every TV has smart capabilities, is there any need for a Roku stick? Not really. So again, solves a temporary problem. But again, story is still hot right now. So I think you're early if you're shorting these things, but I'm not putting them on my long-term investment portfolio and thinking Roku's going to $500 or thinking Peloton's going to $100. Quite the contrary. I think these stocks are going lower by the end of 2020, but I think you're too early yet. That's my opinion.
A couple things here. People are saying, "Are you going to use it?" And I plan on using it. I do other forms of exercise. I swim.
Joel's a swimmer, though.
I swim a couple times a week. I like to, my buddy owns a gym. I go there a couple times a week. And, if anything from my swimming, I need to improve my kick and my lower body. And I'll get on that thing and pedal away a couple times a week. I mean, it's not going to be my sole form of working out, but I'm definitely going to use it. And of course, when I got to, hang some laundry on there too, we'll find a place to do that. And someone also in the chat made a comment that they, people made fun of Planet Fitness. And I tell you couldn't have gone wrong buying that stock off its IPO. That stock's been a hell of a performer. For me, it's just.
Well, who made fun of Planet Fitness? I don't get that.
I thought someone did.
I didn't.
No,
I'll tell you, it wasn't me.
I mean,
wasn't you?
They come out with a $10 gym membership.
Yeah, but they're horrible. But it's a terrible gym. You ever been to one? They stink.
I'll just tell you, $10 gym membership. That sounds like they're trying to blow and trying to be the game changer there, and they are. So, I haven't looked and really dove into the financials on this thing or anything, but I don't see it as just a hot, like all of a sudden this is just a hot thing for the season. This is the Fitbit of the season. I see Planet Fitness as they're obviously figuring out how to do stuff at a lot cheaper than every other gym, so they're shaking up the whole industry.
And I think this is different than GoPro.
I think it's a completely different play.
I think this is completely different than GoPro. GoPro was a camera on a stick, right?
How is this not a treadmill with an iPad on it? This is the exact same thing as GoPro, in my opinion.
No.
Exact.
No. How does
Check out the GoPro chart.
No, you're wrong, Dennis. How does a GoPro improve your health?
I don't know if I'm wrong. I've been wrong because I was early on this trade.
How does a GoPro improve your health?
Why? It's nothing to do with it. It's just the fact that they think it's a novelty thing right now.
Okay, I think that people are
the
more health
subscription model
conscious.
helps. Are people going to keep subscribing for these videos? Maybe. What's the barriers to entry here?
Nothing.
That's never a good thing. My opinion here on Peloton is I think it could get real hot here in the next month still. So I think Citron's way early. So I'm not on the full bear train here. I'm on the long-term bear train that I do believe that in the long run, this is a GoPro, but I don't think we've seen that run in Peloton. I'm scared we haven't seen that big run yet, where GoPro went from $35 up to 90. And, and when did it do this? It did it, as it got into the season towards the end of the year. It did actually fall off. We look at 2014, it fell off before. But, there was insider selling. There was a lot of other things happening there. But I don't see a lot of differences here between that and GoPro. So I'm not a long-term believer in Peloton, but I'm telling you, I'm not telling you to come out here and short it today.
No, I know.
I think there's so many factors in the next 2 months working in its favor that I would be very scared to short it. Those numbers might be exceptional come February because everybody like you, Joel, going out there and buying one right now. This is the season. It's perfect timing for this thing to have a great quarter. I think this is going to be their best quarter, though. And I think if you get a spike up in the February numbers on this, I think that's the selling opportunity.
All right.
So write down, put in a calendar note for February. If Peloton really rips, that's where I want to sell it. So put that calendar note in there, Spencer. That's what we're looking at. We're looking at this as a February short.
We'll move on to some after hours earnings next, but Spinner's making a good point. And the biggest difference between Peloton and GoPro is it is a subscription model.
Well, I just said that.
Yep.
I like the subscription model.
And if you look at RH, we don't know what they sell at that place or what they're doing.
There's a good point there.
Yep.
Because I don't understand RH either, and I'm dead wrong about those two. So I guess you can't mess with these subscription models. So there's a good point there. In any regard here, I think Citron's way early. I think the thing could be, it could run to $40 or $50 on those numbers.
How's he been doing?
The quarter is going to be awesome. I think the Peloton quarter will be really good. Because I've seen the it's advertised so much. How can they not be? I mean, it's on my CNBC. every 10 minutes. Every commercial is a Peloton commercial. They are just they're all over the marketing on this thing. So I can't see how the play is, I think, to buy it honestly right now. Even though I'm long-term bearish, I think the thing could be 45 or 50 bucks before it rolls over. So I'm right now, as of today, on the bull trade. I want to be clear. I'm on the bull trade on PTON for the next 2 months. So I think Citron's way too early. I'm not long it. I'm not short it. But, as a paper trade here, I would be buying this pullback as a paper trade. Like I don't have the guts to put my own money in it because the valuation doesn't make any sense. And I don't know if there's another thing that can make the story break. But from a seasonality perspective, this looks like it could be a really good quarter for PTON.
All right. People are asking about Tesla. I'm just going to see, it's trading up in the pre-market. It's a beast. 11 points from losing the lunch to Jeremy.
Yeah.
The only thing I'll say about this one is you're coming into a gap fill here at 354 when when the truck, the debut of the truck, I know that day, 354 fills the gap. 354.83 was the close on the day before that. So a lot of people may be using that as a target. So there you go. We're trading up in the pre-market. Above that, it opens up to the recent high of the move. And boy, that 360 area looks huge. The actual high of the move was 361.20, flanked by a 360.84 and a 359.99. So there's a couple targets for you. Good momentum going here in the pre-market. So we'll see. Needs to hold yesterday's high 50.73 and the close at 48.84.
That 360 is big. I mean, the ugly truck brought us down for a little bit, but it just keeps coming back. The shorts are so squeezed in this that they use the opportunity of the ugly truck sell-off of 30 points to just try to, cover or, add other people speculating long on it again. And it looks like it wants to go right back up to 360. Long term, this thing is still, an impressive mode here right now. Again, I can't stomach the stock. I've had it in my portfolio a couple times and I just can't stomach it. I'm like this, closet bear or closet bull on Tesla. I'm a closet bull. I just can't stomach the stock. That's why I've written puts on a couple times because I can kind of stomach it that way. The non-bankruptcy trade I've talked about. But I mean, this stock is just impressive. And if I was long it, I'd be holding.
Yeah, and it was in that trading range too, and that's why I made that little bet with Jeremy. I thought, man, it was in like a 327 to 338 trading range, and I just thought, man, it had to give a little back and just using the levels, but not using them correctly. I remember talking with Jeremy on the day that it hit 27.50. That there was another low at 27.10. I said, okay, this is the time we're going to breach support. And instead of thinking of something going through support, it was support. And here you are, 30 bucks higher here. So that's it on Tesla. Really not much else to say, not much else news on it.
Do you know what you did wrong easily on that trade? And that's why I was on the side of Jeremy when you made the bet. I didn't make a bet with you, but I was like, I think Jeremy's going to win this bet. And it's just simply what you did wrong is you just fought the trend. I mean, it's so hard to fight the trend. What's that?
Sometimes I do that sometimes.
You are a born contrarian, Joel.
No, I'm not. I'm not a born contrarian. No, I'm not.
You're not?
No.
Joel loves to fight the trend.
No.
You are, when you see everybody, you're always looking for the high. So you are a contrarian. You don't like to admit it, but total contrarian. So, exactly. And you know what? This market rotates. In the last 2 years, 2017, 2018, contrarian traders have done very well. People don't realize that, but look at the S&P. Look at what it's done since 20. Go out to the monthlies, and look what it's done since 2017. We've been shopping around for a year and a half. We finally just started breaking out here a month and a half ago. So, but if you look, contrarian, everybody's who's fading all these little individual moves has been making a lot of money. So you've been on the right side as a contrarian for the last 2 years. I think the trend has started to resume here now, though, and I'm scared we got a lot more upside here. So I'm fully on board with a lot of, these uptrends here now again. But, that's all that was. It was a contrarian trade, and it's tough sometimes. It depends what type of market you're in. Sometimes contrarian strategies are working. Sometimes momentum strategies are working. I feel like we're now rotating more into a momentum market here where I'm buying pullbacks because I just think there's so many investor and money managers that are underinvested, and we've kind of broke out. So,
Dennis, did you see the stat that the next 2 weeks notwithstanding, this would be the first decade in 160 years in the U.S. without a recession?
It's been an unbelievable market. I mean, you just look, and how do they define a recession? Like, what is that, the economic defining of that? Like, and I know in a bear market, if you want to say that, it's a fall from 20% from the highs. But what is the actual definition of a recession, U.S. economic terms? Do we know?
2 consecutive quarters of contracting GDP.
Okay, so there you go. So 2 consecutive quarters of contracting GDP, and we have not had that in a decade. And the market has followed suit. In the last 10 years, the market has pretty much been straight up, and we've had one little bear market in there, I believe, and it didn't even last long. Did we even get down 20% in December? Were we down 20%? We were close to it.
I think it was like 19.5, but
we were right there. Have we even had an official bear market in the last 10 years?
Yes, yes, I think we have. I think
2011 maybe. It got ugly there with the European stocks in 2011. But there has been few and far between even, corrections here, let alone bear markets. We've had some years where we haven't even corrected, not even had a 10% fall off the highs.
Early 2016 wasn't great.
Yeah, I was just going to mention
last quarter.
Were we down 20% though? I don't think so.
I don't know.
I feel like we were down 10 maybe. Like I'm looking at the charts from the highs to the lows, where we were at like 208 in the beginning of 2015, and we ended up going down to 179. So yeah, that's not a 20% correction. That's just over, maybe 12 or 13. So I think in December, I think we got really close, because we would have went, let's just take the highs, 293 down to 233. So on SPY, I'm looking at 293 to 233. So that's 60 points on 293. That's darn close to 20%. Not quite there though, maybe either. I don't know if we've had. I don't know if we've had a bear market in the last 7 or 8 years. So you could say we're due, but you could say that 3 years ago. I'm missing out on a lot of gains. Tough to fight the tape.
All right, it is almost 8:30. Let's cover a stock here.
Besides Peloton and Tesla, what are you talking about?
Okay, so we got a few earnings reports. Where should we start? I guess we'll start with some of the ones from this morning because they're the most recent. So price recovery is still happening here. 8 a.m. this morning, we got American Eagle report, AEO reporting Q3 EPS 48 cents is in line. Sales beat by a smidge, essentially in line at $1.06 billion. Comps up 5%. They gave some Q4 EPS guidance that was light. However, the guidance range that they gave for the Q4 EPS was 34 to 36 cents. Estimate was all the way up at 46 cents.
There's one number, I'm taking Joel's number, this absolutely needs to hold. It's back from September the 4th, 1366. Absolutely, positively needs to hold that level. If it doesn't, then the story is officially broken. Even though I think the story's been broken for a long time.
I had to reboot my my trade station here for some
reason. We got some
reason.
support down there. This whole 1366 to 14
I'll be there
area.
with you a second. Okay, let me look here. Trading down to see if Dennis came up with a good number here.
Oh, I did. You taught me, Joel.
Okay.
You taught me all my technical analysis. Joel taught me my technicals.
1352. There you go. And then that September 4th low. 1366. Move on. Next.
Whoa. Let's do Children's Place. Stock's just been getting killed. Well, you know what? Getting killed again.
Yep, this one's also
PLCE.
Also from this morning. Q3 EPS $3.03. That beat by a penny.
Holy
sales of 524. 524 versus $534 million. So a slight miss on that print. As far as guidance is concerned, they gave some Q4 EPS guidance that was very light. The range they gave $1.48 to $1.68. Estimate was at $2.06. Also gave some sales guidance that, again, same story, very light. And that's the story here, folks.
That guidance is just awful. This is the definition of a value trap, because this thing looks like it makes a ton of money. The dividend's starting to even get attractive at this level. It's 3.81%. But you look, $160, end of 2018, so just over a year ago, when the stock, everybody had to be piling it on the kids' clothes store. It put a double top up there, though, so your technicians would have been looking at the beginning of January when they were 160, 165. Failed to make a new high, and we've been straight down ever since. You keep thinking, wow, the bar is pretty low here for PLCE, because, here it is, been drifting down for the last 3 months, even into the report. Yeah, I was up a little bit yesterday, but really, you look at this trend, definitely down last 3 months, definitely down last year. Well, the bar was low, but they found a way to get under that bar with this ridiculously poor guidance, $1.48 to $1.68 versus 206. That's not good. So EPS not good at all. And sales, it's that light too. When the guidance is that weak, it doesn't matter what your chart looks like, you're going down.
And you know who's been a or who was? We haven't had the person on a show in a while.
I know what you're gonna say. I knew you were gonna say. Rachel Shasha has been right. Isn't that the one?
Yep.
She's been bullish this one.
Yep. Bearish.
Oh, bearish. Excuse me.
Oh yeah.
Well, Rachel, payday for you, Rachel.
Yeah, I don't know if she's
down
still
16%. Why not go down 20? That's what I say. When they come down 16%, is there usually a retail that falls 20? Why not? I think it goes down 20 today.
Let's see here. It is
just because.
because 56.47, your pre-market low. That's we got a little bit away from it, but under 56.47. I'll just try and find a monthly level for you. And my next monthly level comes in at 53.39. So if you're looking for another target, they're under the pre-market low, 53.39. I don't know if they're going to be able to get it to that psychological $50 level, but holy mackerel, this thing's in trouble.
So I'm hands off until it stops going down. Give me like a few days where it starts to look like it could turn, but I don't want to be a hero and call the bottom on this one.
We'll do one more before we grab our gas. Let's do GameStop, quietly up 100% in the past couple months here since August, but there go those gains this morning. Q3
fundamentals matter.
Yeah. So this report is from last night. Q3 adjusted EPS, they lost 49 cents per share. They were supposed to gain 11 cents last quarter, so not great. Sales 1.43 versus 1.62 billion dollars. They actually cut their guidance. They lowered their adjusted EPS guidance for the year. Wow, do they lower it by
it's incredible.
A lot. So the original fiscal year adjusted EPS guidance range was $1.15 to $1.30. That's for this fiscal year. Now it is 10 cents to 20 cents.
Yeah.
That's all you need to know.
We've been bearish this one for probably 3 years here on the show. And we were talking bearish about this at 30, at 25, at 20, and people were trying to tell me, oh, the dividend, the value. It's just the trends, consumer trends. They're not going in to buy video games. They can just download them. They're all, just right there on their things. They're not going into a physical game. There's still some hardcore gamers that go into the physical games, but it's not enough. And so this is just, the definition of an old, market where they never adjusted. And I just think eventually this thing just continues to go down, down, down until it can't go down anymore. And you know where that's at.
Boom. You got down to $5, right on the nose. That's a
big number.
Big number. Yep.
Yeah. For you short-term traders, 5 is big. It's where securities become marginal or not marginal in a lot of retail accounts. So 5 will be defended. Does it hold 5?
And who's the big guy that's in that? The big boy?
That would be Michael Burry. Well, I don't know if he's in it, but he did come out and say that the balance sheet wasn't all that bad. I don't actually know what his position is in GameStop, but this is the guy who got famous for being in The Big Short. And he came out and said, and he's like a fun.
What about when they stop making money, which it kind of looks like they're saying they're going to do? How's the balance sheet look then? Good question from me.
Okay. Well,
$1.15. We're making $1.30. We're making money. We're not burning. Now we're making 10 cents, 20 cents. What happens when we start losing money? How's that balance sheet look then? Because that's where it seems to be going. All right. The trend is not your friend in the fundamentals of this company. We'll say that.
Let's bring on our first guest of the day, Gil Morales. He is the author of the Gilmo Report, also the managing director of Mocha Investors, joins us periodically to give us his view on the markets. Gil, good morning. Can you hear me?
Good morning. I can hear you loud and clear. Do you hear me?
I do. How's this market been treating you? It's kind of quiet out there this morning.
Well, I'm able to make money, but it's definitely a struggle. And I'm mostly trading on either an intraday or swing trading basis. I don't see anything that's trending outside of Apple that looks consistent or, typical of something I would want to play. There's nothing really what I would call like dynamic companies with strong technical action. You've seen all these hot IPOs over the summer have all blown up. Some of them are trying to come back. But for the most part, it strikes me as not a target-rich environment outside of some swing trading setups that I can find in amongst or amid all the volatility. And that's pretty much it. Meanwhile, the indexes are making all-time highs. And to me, the whole picture seems inconsistent with that. Because in past bull markets, we've seen you just see all this great leadership. Stocks breaking out, running up, and then moving higher. Now you're not really seeing that. So,
Gil, before we get into some individual issues here, you're a veteran of the industry here. What do you make of the Charles Schwab buying TD Ameritrade and the future? I mean, they're both stocks. I haven't checked them as of late. Of course, TD Ameritrade got a nice pop on that. Schwab got a pop too, just kind of holding in here. Give us your opinion on short-term price action and then longer-term ramifications for the brokerage industry.
well, I think I'm a TD Ameritrade client, and I've been with Schwab also. So I like TD Ameritrade much better because of the platform, Thinkorswim. So I'm hoping if when they merge, they use that platform. Otherwise, I may be moving those accounts somewhere else. But in any case, technically, the stock I like in all this, and it's one I tweeted about, is E-Trade, because that one sold off, okay? And it broke below 42. This is about 2.5 weeks ago. And then it posted what I call a moving average undercut and rally type of move, where a stock will undercut a major moving average, usually the 50-day, sometimes the 200-day. And then it will turn right back around and go back above that moving average. In this market, a down big on volume type of move like you saw the day before that. Are you guys showing that trade? Yeah, you can see. Is that a daily chart you're showing there?
Yeah, this is a daily.
So you can see the breakdown below 42 a few days ago.
Here, I'll pull up a 5-day. Here's a 5-day.
There you go. Yeah. And so the move below the 50-day line, which would have been on, let me check that date. That was on 11/21, so November 21st. The very next day, it popped back above the 50-day line. So I get long there. And now it's back up above the 200-day line and sitting tight along there very nicely with the volume drawing up. It looks like it wants to go higher. And I think the Schwab TD Ameritrade thing, that just shows you that the brokerage business is being squeezed. So the only way they can grow is by consolidating and buying each other up. And this has been going on for a little while, and it seems to be picking up speed here with this latest merger. But I think eventually brokers are out of business. In other words, the concept of a retail broker is out of business. What do you need a retail broker for? They're basically overpaid middlemen. And I think the trend in general with the internet and business to business, consumer to business type of connections, you don't need middlemen. And I think that's where the business is going. And that's why all these companies, Fidelity, TD Ameritrade, Schwab, all went to zero commissions because they're looking for a different route in terms of their business model. So if you look at Schwab now and TD Ameritrade, which is, what is TD, AMTD?
Yeah.
Correct.
Yes, Schwab, I like the look there is nice and tight on both of these. So they're going tight sideways, which tells you that the market likes the merger. And it looks like once they do combine, it could move higher. But that's going to also depend on where interest rates go in the market, I think, in the short to intermediate term. But technically, those both look pretty good after they both announced that they're going to be, or actually Schwab is buying up Ameritrade, right? Is that correct?
Correct.
Yeah. So, that looks good. Technically, that looks good. But I think the sleeper here has been E-Trade. So
Okay.
you see that, we see what I'm talking about. And it's actually doing some, got some tight action here along the 200-day line. So it almost looks viable. I might add to that here and then use the 200-day line as a stop for that portion of the position. But so far that trade's been working, but that's the sort of stuff you get in this market. And you got to take advantage of opportunistic movements. So if you get big drops, sometimes you're going to get a chance to come in long. If you get these big spikes to the upside, like look at MongoDB, if I'm pronouncing that right. You guys know how you pronounce that? Is that right? MongoDB?
As far as I know, that's right.
Okay, it's not MonGod?
No.
Anyways, look at this one. It opens up yesterday. Okay, they report our earnings. It opens up at 144.77, And I use an intraday chart to time entries going either way on these sorts of things. So I could have gone long if it was working out that way. But on my 5-minute chart, which I have a configuration I refer to as 620, it gave me a sell signal early in the day, pretty much right at the opening. And boom, that thing opens at 144.77 and it closes at 129.18.
Why does it give you a sell signal? I'm just trying to figure that out, because here's a
Well,
stock gapping up 14 points and you're saying
Right.
it gave you a sell signal. I'm trying.
On the 5-minute chart, I'm using a 5-minute chart to time this. And I
Okay.
have a MACD and an exponential moving average configuration that I've worked out over the years. And it gives me pretty reliable signals. I mean, if the signal fails, it fails, and I just reverse out of it. And sometimes that will happen, or something will show me a short signal early in the day, and then it could be within a few minutes to a few hours, it will reverse that signal and become a long signal. A good example of that would have been DocuSign last Friday, where that one actually opened up on Friday, and that's actually 3 days ago, 3 trading days ago. Is that Friday? Am I looking at that right, or is that Monday?
Yeah, 3 days ago. We seen on the chart.
What's today? Today's Wednesday. Yeah. Okay. So on Monday, it gaps up. It opens at 74.94.
Yeah, Friday's
And,
action. Yeah.
Yeah, and you get a yeah, that's right, because we don't have today's bar in there. So that would be Friday. So you get immediately I got a sell signal on that. So it opens at 74.94 and then it plummets down to 71.06, hits the 10-day line. At that point, I get a buy signal on my 620 chart, and you turn and go long, and it ends up closing right back up just above where it opened.
Wait, I'm sorry, Gil. What stock is this?
DocuSign, DOCU.
Okay, I misheard you.
So you see how that I don't know if you guys are you showing the opening and closing ticks on that?
Yeah,
I am now.
Okay, yeah. So you can see what I'm talking about there. And so you can just get this big volatility. And I find using this chart on an intraday basis, I can do much better than I can trying to position trade these things. Because if you bought that breakout, you're probably underwater now. And most breakouts in this market don't work. In fact, almost all of them, and the ones that do work, if you're lucky, you'll get a 15, 20% move, and then they'll come back in.
Gil, it
So,
sounds like you're doing a lot of short-term earnings, type reversal trades.
Right, exactly. I'm taking advantage of the volatility.
Yeah.
And
So that's where you're focusing right now, is maybe on these earnings plays and looking for a little reversal. You're not only taking advantage of that though, because one thing I would say, and we don't talk about this all the time, but you have a lot of fundamental players that are going to be playing on a day after it reported. Where
Right.
On other days you might have technical traders, you might have high frequency traders. There's a lot of fundamental traders, a lot of big fish. So if you can identify when this is going to all of a sudden move and the big fish are going the other direction, those big fish, one big fish could drive the thing up 5%, if they decide all of a sudden they start to like this.
Right,
So
but
you're trading against the right people, really, when you're identifying the big fish.
Right, and I'm actually trying to move with them. So I mean, and sometimes you'll get a stock like Arrowhead Pharmaceuticals, which has been a great long. It had a viable gap up 2 weeks ago on the 25th of November. And it pulled into the 10-day and it has trended higher. So that's a situation where it's less of a day trading situation and something that's trending. But for all I know, you're going to get 30, 40% out of this, because it's up about 40% from that initial breakout at the 50 level 2 weeks ago. And that may be it. If I can catch some of these are also pretty good. And they'll tend to be high velocity moves, and then they end. So, it's just that kind of a market. It's just a very weird market. And I've done this for 28 years now, running on 29, and I've never seen anything this strange. Meanwhile, I'm told we have a booming economy, but I don't see it in the data. And I know in California here, it looks like it's booming because they're building houses wherever they can. And in fact, down the street from me, there was a tiny little lot, which I thought might be a small lot for one house, and they built 3 houses on it, and they're selling them for $2 million each. So there's this weird sort of boom in some areas, and meanwhile, the economic data is very tepid. And meanwhile, the Fed has to keep rates at 1.5 to 1.75%. So there's so many paradoxes out there, not just in the market, but in the economy. And I think some of the boom bust stuff that you see in the economy is because certain areas are seeing immigration or migration into those areas, and other areas are seeing migration out. Like California is seeing migration out, but we're still pretty much a booming area in Silicon Valley. And down here in LA, we've got a lot of tech companies moving in, like Google has moved in down here in a new development called Playa Vista. So it's just a very weird time, but also, not just weird, but fascinating to watch and to study and even to trade, although I would prefer to go back to the 90s, frankly.
Gil, what are your thoughts here on the Fed today? We're going to get another decision. Is this going to be, a non-event here where we kind of, 97% say we're not doing anything with rates here? Is this a non-event today?
Well, that would seem to be the conventional wisdom, right? I think they're not going to do anything. They're going to give us the usual language. But Powell has been saying that it would take a sharp economic downturn in order for them to come in and start lowering rates again. But that's what they say. But in the meantime, there's this sort of stealth QE4 that they've been implementing to handle this overnight repo market issue that they've been having, which maybe, I don't know if you guys have talked about that at all. But to me, that's QE4. Their balance sheet is expanding and has been doing so for the last several months. So in my
those
view,
those are overnight loans, though, are they not? I mean,
they are. But why are you having such a huge dislocation where overnight rates are getting driven above 10%, and there isn't enough liquidity to handle the overnight repos that are going on? So what is up with that? But you don't know for sure. Is that an issue? Does it tell you there's a tear somewhere in the fabric of the financial system, and eventually that tear will split wide open, kind of like the mortgage crisis in 2008? Are there a lot of little tears in the fabric of the financial system ready to tear? Debt on a national, individual, and global level is just in corporate level is at all-time records. How much further can it go? The government's running $1.3 trillion trailing 12 deficits. I remember the 90s. To me, the 90s were a boom time because not only could you see it, but you could see it in the data. You walked around, people were prospering, and you could see it in the data. We had plus 5% GDP growth. The government actually on a cash basis was bringing in enough tax revenues to balance the budget by the end of the decade. Now, what are we doing? We're just running bigger and bigger deficits, and all this tepid 1.9, 2%, 2.1 GDP growth as the government measures it, which in my view is overstated because they understate inflation. All of that is being fluffed up by government spending, huge record government spending. And I'm not sure, where the boom is, overall. I know if I go to Nashville, you can see a place like Nashville is booming, but 10 years ago, Nashville was kind of quiet. Now the place is nuts, and they have traffic now, which surprised me when I was on the freeway there not too long ago.
Gil, before I let you go, any just final thoughts for the next few weeks or few months as to who could lead this market? And we're at all-time highs here, obviously, or where you see this market going just in the short to intermediate term here?
Well, I think the problem with the market primarily is very news oriented. So I think if we go through this December 15th tariff deadline and they delay those, and I think you're going to rally into year end. And stocks I like would be something like I look at Advanced Micro. I think looks pretty good. It's running nice and tight. I like Tesla. Tesla's been acting well. I think it's a little extended here. It was buyable along the 20-day line last week, and that was something I talked about in my reports. I like some of these IPOs like Ping and Datadog, DDOG. And I'd also keep an eye on Disney. It's pulling in here. But I've been, I ponder this one. And if Disney is now going to move in force into the streaming entertainment area, and it's going to become another Netflix, which I think they have the potential to do, why can't it have a valuation like Netflix? Either Netflix comes down to Disney's valuation or Disney's got some upside from here. And I like to pull back down in here to the 20-day line.
That was my exact argument I was giving on Netflix and Disney a couple months ago.
I didn't hear
that. And then
that,
Netflix ran up on me 10%.
Right. Well, yeah, I mean, that's a possibility. And technically it's in a position where you could post an undercut and rally move. And you actually did at the 20-day yesterday. So it is in a viable position. I would just use the low of yesterday as my selling guide. And that's a trade. And I think you might, see it pop to the highs if we see the market rally into year end, which I think likely, and I'm going to say likely, because with this market, you never know anything for sure because it's so crazy. If we get this tariff thing delayed. So,
all right. Gil Morales is the author of the Gilmo Report. You can find him on Twitter at Gilmo Report, GILMO Report. Gil, thank you so much for the time today, and have a good rest of your year.
Yeah, you too. Thank you. Take care.
All right.
Talk to you soon, Gil. S&Ps Just a creeper rally here, folks. We are up now 5 handles at 31.41. Pre-market high 43.50. That fits well with yesterday's high at 31.43. So boom, above that pre-market high, it opens it up to Friday and Monday's high was split them at 31.51 and 31.49.50. There's your next target on the upside for your bulls. If in fact you can take out and clear that pre-market high. Triple D, see anything extraordinary out there? Anything
Imbalances are
anything?
big, some really big ones here this morning, and I'm not sure why, but big to the sell side on a few of these. And obviously, one of two things are going to happen. Some of these sell imbalances are going to flip to buy imbalances, or they're just going to go, or the market's going to come back in because wow, there are some big sell imbalances this morning. HPQ 324,000 to sell. Bank America 328,000 to sell. It made me check twice that this wasn't like option expiration or something. I'm getting my Fridays mixed up because these are an imbalances that you see on a significant day. Maybe it's Fed day. AT&T 202,000 to sell. ExxonMobil 137,000 to sell. Chevron 57,000 to sell. Chevron did have some news last night. They were taking a write down, so there is news on that one. CVX. Kroger 52,000 to sell. I mean, it's through random sectors. It's just all over the place. Wells Fargo 54,000 to sell. A few buy imbalances too. McDonald's 53,000 to buy. Also Bristol Myers 105,000 to buy. That's significant as well. Man, BMY has been hot. General Electric always, true to form. 277,000 to sell in General Electric. House of Mouse Disney 56,000 to buy. So that one's going in the opposite direction, but they're fairly large. Imbalances could have a big impact on the open here.
All right.
There's a few buy imbalances too, though. So maybe a little selective perception on my part to say they're all sells. There's some really big sells, but there's a few big buy ones too. So, maybe I take back because I see Visa with 42,000 to sell too. That's $182 stocks. That's significant to the upside. So maybe I'll take back with just saying that they're all sell. I just think they're big. There's big numbers here today. So your individual stock stories are going to be impacted by some of these imbalances this morning.
All right, let's get to OLLI's bargain outlet here.
Okay.
So they had
I
earnings.
guess it was a bargain yesterday.
Yeah, earnings after the close yesterday. They were good. EPS beat, sales beat. They reaffirmed their guidance. They also named a new CEO. We didn't discuss this, but over the Thanksgiving weekend, their CEO, who's also the co-founder, died suddenly. Yeah, Mark Butler. So they named a new CEO. This guy's been with the company prior. And so his name is John Swigart. And so he's the new president and CEO. And so that's official now. And he was the interim for the past few weeks. And earnings are good.
Stocks up $5 here. It was up a little bit more. I will just say where you stalled out last night gets close to coinciding with the highs of the move back on November 5th. We got up to 67.83. If we go to the after hours chart from last night, I guess we were slightly higher than that.
I got through it, yeah.
A little bit through it, but not for very long.
Yeah, 69.57 is where you spike to. So good news is it's up $6.10. The bad news is you're $3 off the high. Big destruction after the last report, and I think your high of the rebound has been 67.84. So I'll use that. I'll use 67.84. If you want this thing to go back up, it goes there, it holds 68, it takes the pre-market high out, or after hours high, excuse me, and then you got a lot of air in this thing to 76.42. That would be a gap fill from August 29th. Don't think we're going to see that today. Also, I'm sure there are a lot of shorter term players who'd be like, give me $70 today. I want out at 70. That's my target. So just a psychological level there, but backed off the pre-market high for now. OLLI.
All right, that's pretty much it for the earnings. If there are a couple more, if you'd like us to cover them, drop them in the chat. But let's go over to some ratings here. Still quiet. Not super busy this morning on the ratings.
I didn't see anything. What did you see?
There are a couple of things that caught
There's a couple.
eye. Yeah. Auto. Well, no, that was earnings call here. So Morgan Stanley upgrading Rockwell Automation and WW Grainger to neutral from underweight. So they're throwing in the towel on the bear train right now for ROK and GWW. As far as downgrades are concerned, Wells Fargo downgraded Walgreens to neutral. Also Cigna to underweight and EHC to underweight. And what else did I see here? Actually, that's kind of it. What do you see, Dennis?
No, they got the bulk of them. I mean, there was no real huge names from the ratings parade here this morning, and and like I've said before, the big days for ratings are Mondays and Tuesdays. The analysts maybe over the weekend are getting their notes out, they get the Monday out, and then it seems like Tuesday's always a huge day because maybe they're just finalizing, come back into work, I'm gonna finalize that Monday note that I was putting together and get it out there for Tuesday. Those are the big ratings day. Wednesday starts to slow down, and then you almost get nothing on a Friday. So, because obviously analysts are taking the early weekend there. So I would say if you're looking just from ratings, usually Mondays and Tuesdays are the biggest days. We start to slow down here now. You got a Fed announcement. Maybe people are waiting to see what happens with the Fed too, even on their individual stock stories, because if all of a sudden you get a big move, and stocks start moving 2-3%. Not that they're going to do that, but I think there's always caution, to just throw out a big note before a Fed meeting, even if you're not even, analyzing a bank.
We're going to do some of these symbols here in the chat. Juan Pablo Posada is asking about Square. We're going to do those.
With Sean?
Yeah, we're going to do some of those with Sean. And let's see here.
I had a couple other stocks just, buybacks are sneaking in here again too. And we don't mention them a lot, but we should. CMI with a big buyback last night. Also, I don't follow Landstar Systems, but it's also announced a big buyback last night too. LSTR. Give me the CMI because it's a more widely traded stock. Cummins Spencer, and it announced a buyback last night. Big.
I was also going to pull up AT&T here. They entered into an accelerated $4 billion buyback program with the goal of retiring 100 million shares in the first quarter.
Was that a new buyback announced, or was that
No,
just they're giving details on?
They're speeding it up.
They're speeding it up.
Yeah.
Because it's up nothing. And it's also, if I look this morning, AT&T has a 203,000 sell inbound, so it looks like it even opened in the red.
Right.
So,
and sorry, what was the other one? Next year, is that what you said?
LSTR was one,
right.
And then I want to look at CMI specifically.
Okay, right.
I want to look at CMI.
So CMI reported a $2 billion buyback last night. LSTR is going to buy back 3 million shares.
That's big too, and a special dividend for LSTR as well. So both those stocks probably going to trade higher. CMI was bid up a $1.50 there last night, so we'll see what happens here today. Anything striking your fancy on the technicals? Any of those, Joel?
No, not the CMI. I mean, it's it's moving towards its all-time high. I mean, no, not quite all-time high. Just the only thing I'm looking at here for CMI, if you're looking for some follow through, last month's high not too long ago, 186.73. We're $7 away from that. On the dailies, just quiet ranges the last couple days in this thing. 181, 182, nothing special. I guess on the downside here, I'd look for some downside. 179 splits the lows from yesterday and the previous day. So really matching, not quite an inside day, but almost matching ranges there. So be a little bit patient above this one, breaks above 181.30. Maybe look for this 182.19. If for some reason we can't hold 179 area, your next daily low comes in at 177.60.
I guess we're moving into the next hour.
Right. So I was going to wrap up our first hour here. We're saving all the questions from the chat for this next hour with Sean. But if you want to catch the main part of our show, I'm going to stop the recording here in a moment. So if you want to catch this part of our show again, you can do so on our podcast. It'll be available wherever you get your podcasts, iTunes, SoundCloud, Stitcher, etc., or just rewatch our show on YouTube. Still working on that fix for the premarket.benzinga.com page, and we're aware that has not been working for the last couple of days, but the developers are on it. Show is always available on YouTube, though, so youtube.com/BenzingaTV to catch the show. I mentioned off the top, Dennis, I don't know if you heard this or not, but if you want to leave us a voicemail for us to potentially play on the show, you can do that now. I'll give you the number again, 734-494-0246. That's a Google Voice number. Just give us a call. Give your name, ask a question, and maybe we'll play it on the air and discuss your question in that way. So something else besides the chat as a way to engage with us. I want to thank our guest today, Gil Morales. Thanks to all of you in our chats. Please remember all the information on our show meant to be used as informational purposes only, not for investing or trading advice. And on that note, everyone have a great rest of your day. And now I will bring on our guest for the bonus hour of our show, which we've been doing every Wednesday for the past month or so. Sean Udall from Quantum Trading Strategies. Sean has been joining us once a week and hanging out with us for until 10 here. So Sean, good morning, and how's it going?
Good morning. Can you hear me?
We can hear you.
Okay. Well, good morning, Benzinga.
Yeah, there we go. Good morning to you, Sean.
Hey, how you doing?
Good. How you doing on this Fed decision day? Now, if I had to guess, you really don't care.
No,
No.
no. There are Fed days that last December, the Fed day was pretty darn important, right? So there are Fed days I think that matter. I don't know if this one really does. In fact, I'm going to say that, and I want your opinion on this. When do you think we get the next Fed day that matters? My guess is we probably don't get a Fed day that matters until we have a rate hike.
Well, after that hot number on Friday, last Friday, I said, I think they're going to be sitting pat until June, or at least. I mean, don't think with the numbers that they came up with on Friday, certainly don't think they're going to lower rates here. And I think they're afraid to bump rates higher. So I'm looking mid 2020 here, maybe before we get a next Fed rate move. And, we'll see if you keep getting hot numbers like this, maybe they'll be forced to take it up a little bit. I don't know if they're going to do that in an election year, but a lot of different factors. I don't think they're going to do anything to rock the apple cart at this point.
Yeah, I don't think we get another rate cut in this cycle. I think we were lucky to get any at all, really.
Mm-hmm.
I mean, the Fed did make. I mean, we talked about this a couple times at least over the last year that, the Fed definitely jammed too many rate hikes, especially relative to global central banks. But they probably should have stopped about here. They should have got to about 100 to 150 basis points, and then just said, okay, we've jammed rates up quite a few times. Nobody else is raising rates. Let's see what happens over the next couple of years. But they always overshoot. That's what the Fed does. They always overshoot. And I don't know. I guess the whole world is adopting. I didn't believe this in 2013. I didn't think this was going to be the case. I used to debate a lot about rates with some other people. And I did not think the whole world would sort of embrace the Japanese rate culture, zero bound forever. And it is kind of disturbing. I don't know what changes this. Maybe in another decade, if we smartly refi a lot of the global debt out there at super low rates and lock a lot of that in for many, many, many years, then we have more room to raise rates. I almost think that's kind of behind the scenes what has happened. Because if just imagine if rates were, just imagine if Fed funds was 4%, and the long end was 650, and I mean, there wouldn't be a country in the world that would be able to pay their national debt. I mean, that's the ugly truth, really.
All right, let's we covered interest rates here. Let's cover some breaking news here.
Sure.
Sean, I don't know if you wanna pull up your chart here. I'm pulling up my Pro, and it was reported at 8:16 that FAA Administrator Dixon says Boeing 737 MAX will not be ungrounded in 2019. Now, I never heard officially that it was going to be flying back in 2019, but
me either.
Yeah, the street is they're taking showing this as bad news, which it is. Man, this thing has just been in a trading range, and it's gotten wider. It was like 324 to like 390, and then it started to wind in a little bit. Maybe that's still that 325 area. Sellers stepped up to 372. So I don't know. I guess if you want to do this from a trading range perspective, you still got some more room to go on the downside. It's always different, if you're short and you're getting this kind of news, it's kind of a nice windfall. 341.07. That marks the pre-market low. Your dailies, what do your dailies give you? Your dailies give you 339. 45, 339 and a half were a pair of lows from October 31st and November 1. So 340 next level here in Boeing. Any thoughts on this issue, Sean?
Nah, not real. I mean, it does seem like the downside is pretty defined. By the way, I pulled the charts up. So if you want to take the share back.
Okay.
But Boeing, look, I got a daily chart up here. Again, this is kind of one of these uninspiring stocks to me. It's kind of a tight wedge. I don't know, maybe three. It looks like it likes to bounce off 320 or 330. And when it does bounce there, it's a pretty good bounce. But yeah, I don't know. This one just seems like they're better ideas both on the short and the long side.
Yeah, I mean, I think so. I mean, this stock had its major run, had the problems, unfortunately, with the incident, and never recovered that 400 level. I mean, this has been chop and slop. So
no,
I guess
but at the same time, look at the 5-year. I mean, it's, the stock was a 3/4 bagger over a 2 to 3 year period. I mean, it's a pretty good move. So, I think we talked about this before. Honestly, I'm surprised the stock hasn't dropped more on the max issue and all that stuff. Frankly, I'm sort of surprised it's hung in as well as it has. But the pipeline's huge. The backlog's huge. It's an oligopoly, and I don't think there's anybody that doesn't think Boeing ultimately makes a lot more planes and a lot more warcraft and stuff like that than Airbus does.
Yeah, I mean the backlog for orders. I mean, who else really makes them, right? So
no, it's a 2-horse race, and Boeing sort of dominates the 2-horse race. So it's not a surprise that the stock has held up relatively well.
Also, Chevron taking a $10 billion charge here to write off some assets. Spinner pointed out in the chat that Saudi Aramco surpassed Microsoft and Apple in market cap. I'm really not following that too closely. But first, give us our thoughts on Chevron here. Trading in the red in a little
this
bit.
Isn't this is more your baby than me. I do follow the E&Ps more, and they've been devastated as we all know. Steady Eddie. I mean, hey, they got the Saudi Aramco deal done. I mean, they quietly got it done. So, it's out there, it's trading. Again, this is one I'm really on the contrary. I think oil goes quite a bit higher. And I was sort of half right, half wrong this year. I mean, we had a pretty good move off of lows. We oil bounced about 15, $20, but it never really went where I thought it was going to go. I thought we'd see oil sort of 70 to 80 this year. And what was the ultimate high this year? Like low 60s, I think is about as high as it was able to do. So, I mean, we'll see Chevron, the refiners are much safer. Chevron's got a very diversified business, production, refining, everything. So, I don't think a charge hurts.
We got to 63.35 when that facility was under siege. You got to 63.35, and then that faded, and it faded hard, but it's climbing back. What's your bull scenario here for crude oil?
Well, there's lots of data. So if you want to get wonky, there's lots of data going out. So really the next 6 to 8 months, if they're going to try to take it down, the price of oil down one more time, they probably have about a half a year left to do it. And then there's just certain things that are starting to happen, like the cost of finding new finds is higher. The cost of getting oil out of the ground and these new finds is a lot higher. So, I mean, I'm not a big believer in this, but it tends to work. So remember when gold was 400 and the whole bull case was, you can't get gold out of the ground for less than $800 an ounce. Therefore, it's got to go above that. Well, it did. It went way above that. So then remember the whole theory that, it cost, 5,000 blah, blah to produce a Bitcoin. right? When Bitcoin was 1,000, and the cost of production of Bitcoin. Now that's real wonky. Like that's kind of funny money there. But if the cost of getting an incremental barrel of oil out of the ground is not $25 anymore, and it's more like 60 or 70 or 80, eventually price of oil is going to have to get there. And there's a lot of bankruptcy fears right now. There's a lot of penny stocks that people have painted that, oh, these are going to go BK. Well, what if it's just a lot of tax loss selling? And what if, there's not as many companies actually hurting as the stock prices would have you believe? And because when I remember when the oil companies get really desperate, they cap wells. I don't hear about too many companies capping wells right now. So, there's been a big boom, obviously, as you know, in U.S. frac shale production. That, that's sort of a 5 to 10 year easy find, if you will. I mean, we've been doing a lot of fracking and shale production now for well over a decade. So again, we've kind of tapped the low hanging fruit, I think. And I think that the reality is just going to have to show up that the cost of getting oil out of the ground is not $25 anymore. It's a lot more expensive.
All right,
So I don't know ultimately where it settles, but
let's cover one more chart here, one more issue before we move on to our guest, Robin DeShays of Miltonian Capital Management. She's going to provide
looking forward to that.
Yeah, provide some commentary on PCG. But people are worried about Home Depot falling off a cliff today. Home Depot, HD here. I believe that was that pop off earnings. I mean, how many times?
Yeah.
It was. Can you confirm that? Yeah, you had. How many times do you see that? You made the all-time high, the run up into earnings, and then the gap and go after earnings. I guess if you're worried about this thing longer term, I mean, I do see the low of the move at 211.77. You have a gap down to the prior's earnings report at 208.82. I mean, I don't know. I mean, it doesn't look like it's fallen off a cliff today to me, but I would definitely. I mean, this is a stock people love to own too. But I would keep an eye on. Yeah, not me personally, but I think I got a little bit of lows in one long-term portfolio. But I mean, you have to keep an eye on that 211.77 low. A breach of that certainly could see some more downside in this one. Trying to recover. Any thoughts on Home Depot?
I pretty much agree with you. I mean, it's I don't have a trend line in here, but you can see it's broken. This is another one. A lot of mojo, lot of gains here over the last 5 years. I don't know. I mean, these are all these kind of stocks are. I mean, frankly, I'm surprised many of them are as high as they are. McDonald's is another one. Lowe's was a great catch-up trade because at one point Lowe's was really beaten up, and this, Home Depot was. So Lowe's is kind of back to where it probably should be. But yeah, I think you kind of hit the nail on the head. It's just it's kind of
Home Depot.
Yeah. I think it's just kind of a tapped out name until the next catalyst.
Okay. All right. Easy Mike is looking for this thing maybe at 201 to get down there. So be patient. But definitely to me that 211.77 through there, you definitely probably got some sell stops if people still use them anymore. And Lowe's, man, I wish I went to look at that chart after seeing the Home Depot chart. That's just still within striking distance of the all-time high here. All-time high 121.22 has backed off a little bit, but certainly not very much. Well, we're going to bring in one guest today, and I want to make sure Spencer, make sure Spencer is ready for our guest. We have Robin here, Robin DeShays from Miltonian Capital Management. Good morning, Robin.
Hey, good morning. Can you hear me?
Yes. And how do you like this? We do our show from 8 to 9 Eastern. You're out there on the West Coast, so you've been nice enough to come on at like 5:15 in the morning. We're giving you a little treat today, having you coming on at 6:15. So thanks for coming on.
Yeah, that's no problem. I'm enjoying my coffee and listening to you guys.
Okay, so the reason we like to bring you on the show is there's probably not a more newsy stock than PCG, and got hit hard, went back down to that old, did it get as low as $5 again?
It was down there.
Yeah, it got down there. I mean, on the monthlies, last month it got down to 583. And then lo and behold, they come out with a, a 13, I believe a $13 billion settlement. I guess the street thought it was going to be 26 billion or something. But that's not the case. So just, tell us about the news and the recent price action.
Well, so the settlement is with the wildfire victims from 2017 to, well, not including this year because that's a different claim, but so wildfire victims, also the Ghost Fire, which was a fire in Oakland. And there is a potential for much higher damages had it gone to trial and had there been punitive damages. And, originally, I think the company thought perhaps they'd be able to settle without a trial being forced, but a trial was going to start in January. So they were under a lot of pressure to settle, and they settled for much higher than their original offer, I think was about 6 or 7. So they settled at 13.5 billion. And quite a lot of that will be in new equity. So, and quite a lot in cash. So I think it's 7 or 8 billion in cash and the remainder in equity. So the victims will have equity put into a trust, and that will, we don't know the details of the plan yet, but they will eventually get some of their compensation from an equity pool, and not clear how or when that will be sold. So that's something I think we need to keep an eye on.
Okay, I'm on the line here with Sean Udall of Quantum Trading Strategies here. He's joining me here in the second hour. Sean, do you have any questions or comments here for Robin?
Yeah, so the first one would be, so if there's an equity component on that deal, does that so has that kind of taken a bankruptcy filing off the table, given that if you're going to grant equity as part of a settlement and the equity is worth 0 or theoretically is worth 0, it doesn't really make a lot of sense. So explain that dynamic, if you will.
Yeah, so they're in bankruptcy. They will have what's called a plan of adjustment, and the reason they're in bankruptcy is that the claims exceed the liquidity of the company, right?
Sure.
Because they had all these pending claims. It doesn't mean, so they were illiquid, but it doesn't mean that the company had necessarily no value. So they're in bankruptcy and they will have a restructuring, but it looks as though the debt itself, not the wildfire claims because those are being negotiated, but so the existing debt of the company looks as though it will not be restructured. It's not a certainty at this point, but it's looking more and more like the debt will be more or less intact and maybe even restated. It's hard to say. So the amount of existing debt was already known. What's not known and what will affect the value of the equity is how much new capital has to come in. And so we know that wildfire victims will be receiving, it looks like about 7 billion or so of new equity. That will be dilutive. And then the company needs a lot of cash, and because they need money for CapEx and operations, and they need to make improvements to their grid, and that's going to be in the billions. And So what's going to happen is instead of cutting the debt, there will be more capital, more cash put into the company in exchange for equity. And it looks as though the dilution won't be enough to bring the equity value to 0. It's hard to say where it will end because we're still in the process of adjusting all of these claims. But you see now, I think the equity is at 12. To me, that's getting towards the optimistic side. It's very hard to know what the assets of this company are worth because they have, as we've seen, their grid is pretty deteriorated. So, so I think, the company is putting its best foot forward in terms of saying, this is our future plan. once we get all this settled, once we get all this cash in so we can do CapEx, we're going to be a vital ongoing concern, and we're going to fix these problems. They have still a lot of hills to climb, but this settlement is a big deal.
And you,
Well, yeah.
I know you look, or Sean, you got follow up there?
Yeah, well, I was just going to say, have people delved into, obviously the value of a company long term is is its discounted future cash flows. So have the proceedings, if you will, the adjustments, I mean, have they basically put a plan forth that makes this a viable going concern? Because I would almost think that you have to, it's either got to be, like you said, what are really the assets, right? The assets really are just their billings in the future, right? The fact they have a business and they can increase rates. So I guess that's what where does this go from a rate? How much do rates go? What are the cash flows of the companies? Anybody kind of delved into that aspect of it?
Well, they're regulated utilities, so their rates are set by the California Public Utilities Commission, and they have to ask permission to increase rates, and they did ask recently, and I don't believe they will be increasing rates. It appears that they're going to have to raise a lot of capital to improve their grid and make their process more efficient and more safe. And that's an expensive thing. And it's something that you're right. What makes a company valuable is its cash flows and its constancy, the fact that it has millions of customers.
That's right.
And so that's very valuable. They have opportunities to reduce costs in terms of renewable generation, which is much lower cost than, say, a gas plant. And they've been on that path. But they also have many, many years of deferred and neglected maintenance that have caused a lot of problems for them. And that has to change. So it is a very interesting, it's probably one of the most interesting stories in the last few years in terms of really, if you look at the big picture, many utilities will struggle with these issues, even if they don't have wildfires.
Yeah, I mean, it almost seems like it's the most interesting bankruptcy ever because
it's really for people like me who that's what we do is we invest in the debt of distressed companies. It's been a fascinating one, and I am very curious to see what the final plan looks like and how the market receives it, how the equity trades, and but it's a complex and it's still evolving. There's still a lot of things that need to happen for them to emerge.
Is debt gotten down to levels that have looked attractive to you yet, or is there just too much uncertainty with the entire situation?
Well, if the debt remains more or less intact, and it's trading around par, I believe. I haven't checked it in a few days because it's not trading at distressed levels, but okay. At one point it was down there. But with this plan, basically you have competition between the equity holders, the debt holders, and the wildfire victims, and they were trying to get each other aligned with each other to try to crowd the other out. So with this new setup, it looks like the bondholders are basically going to get what they would have gotten if the bonds had continued paying, okay. And equity will get a lot of new capital in, so it'll be diluted, but there will be value in the equity, and then the wildfire victims will get some cash and some equity. And the state of California is providing some financing for some of these wildfire claims, and that will be very helpful for the company as well.
And just the impact on some of the other California utilities. Edison International had a sell-off that's recovered. I believe there's Southern California Edison here. These companies have seemed to avoid the problems of PCG here. Any comments on some of the other California utilities?
Yeah, Edison has had its fires, and there was a fire that was started by city of LA Department of Water and Power this summer. So all of these utilities in wildfire areas are at risk, and the system is evolving to help keep the healthy ones. Like Edison is a fairly healthy utility, to keep them healthy and keep them out of bankruptcy, because it is not good for the public to have these entities in bankruptcy and all of the uncertainty. So, this has been a big wake up call in California for handling these kind of threats, which, up until 2017, I think it was thought of as, a risk, but no one understood it to be catastrophic or potentially catastrophic. So the state has dealt with it. And, many people look at just sort of issues of climate change, whether it's hurricanes or flooding in coastal cities, and any utility could be affected by something like that.
One more question, kind of a broad question here before we let you go. Obviously, looking at distressed debt and equities, interest rates are a factor in that. Figuring out your cost of carry and whatnot. Big Fed decision day here. I guess probably from your perspective, rates aren't moving a whole lot in either direction. Just kind of made comments on the overall economy and current interest rate environment.
I mean, interest rates are pretty low, and they're attractive for healthy borrowers. I think really our only concern is for the kind of more edge cases where there has been a lot of leverage added to certain small companies, and it's a funny situation where I don't know that interest rate changes will be really material for these guys. It's more about leverage. If you're 7 or 8 or 9 times levered, it's going to be hard to get out of that situation. So we'll just have to see what happens. But overall, the banking system is healthy, and consumers' credit seems pretty healthy. So so far, so good.
So far, so good. Robin DeShays, President and Chief Strategy Officer at Miltonian Capital Management. 2 guests out on the West Coast today. Robin.
The best coast.
Yeah. Thank you very much. And we'll be following the price action. Have a good holiday and New Year, and we'll be talking to you in 2020.
Wonder. You as well. Thank you, guys.
See you, Robin.
All right, heading into the open here, we went up and kissed that. How close do we get to the pre-market high? Pre-market high was made between 3 and 3:30 at 43.50. That was only 2 ticks through the high from yesterday at 43 even. Few red candles here. For me today, a lot of thrashing around here in the market ahead of the Fed decision. So I think kind of a range-bound day here, not really picking any particular levels. Mid-range on the session comes in at 36.50. Your close is right at 36. Monday's close right there at this area. So holding this 335, 336 area. 31.35, 31.36 gives us a shot to test the pre-market high here. Sean, I know there's one stock that we've been going back and forth about over the last couple of days. We'll get that in 1 second. Just heading into the open, anything in particular on your radar? I know last week who had earnings that we were talking about.
Well, Zscaler, they're actually back to a level that's kind of halfway tempting. Yeah, kind of that 46 level. Now I'm kind of thinking, man, 44 to 46, is a nice little range. But so here's one people are probably watching, Chewy. Chewy's IPO lockup is today. Stock's actually reacting well. It's up 4.8% pre-market. Gonna open. Looks like I think it's opened right now. So up pretty good. And now,
see, a lot of people bank. I mean, how do you know if someone's actually going to sell their stock?
Well,
right?
so to me, this is a really interesting thing because this is a huge lockup, very big. So here, what have we seen? And this, we've seen everybody has sold and shorted all these names into the lockup. That trade worked really well until FSLY. And So in fact, I was lucky enough to buy that, I think 1 or 2 days pre-lockup. So I kind of have been sniffing this coming, like thinking, look, it's like all these crowded trades. They get crowded. Everybody thinks it's an automated, like it's a printing press trade. Like, oh, there's no way I can miss on this trade. That's when that's when they stop working. So the fact that Chewy is up, I mean, this is up a lot for a large lot. I think this is like 50 to 100 million shares or something. It's a huge lockup. I think Fiverr was yesterday. How did that trade? Let me look. That's FVRR, is it?
Yeah.
Yeah, FVRR. I mean, that traded okay.
Yeah.
Kind of that's probably a little bit of a tax loss victim. Anyway,
that ended up green on the day. Was the lockup yesterday?
Yeah, lockup was yesterday. So you're saying it was green yesterday.
Yeah,
so there you go.
Yep, there you go. It opened at 2020 was your close on Tuesday. It opened, boom. If you were so inclined to fade that 20, the selling balance, you bought.
I mean,
you bought
that wasn't a bad
day.
Candle. Look at that candle, man.
Yep.
Yeah.
You bought the low of the day. Exceeded it a little bit today. Yesterday's high, 2165. Still green on the session. Just going back to this Chewy. I mean, I just can't base trades on something that I think someone else may do.
Me either. So can't do it. But you can, if anything, like I'll kind of say, like, look, where's everybody? What side of the boat are they all on, right? So, if they're all on the negative side of the boat, that helps your odds on the other side. So, but yeah, you don't want to use any one single factor. I'd point out, by the way, that I think Chewy had a pretty good report. I mean, they're kind of, the reports are almost too good in a way. Now, this is not a negative, by the way, but it's almost like they're too consistent. But if they can keep doing that, what I mean by that is they guide slightly higher, they guide full year slightly higher, EPS gets a little better every quarter. I mean, if they keep doing that, this is going to be a very popular stock. So, but there again, I went and banked that they can do that for 20 quarters in a row. But they've reported very well, and the stock has gotten down to a fairly attractive level. So I'm laughing at this because I think every world thought there's no way the stock was going to open green today. So that's pretty funny.
All right, I'm trying to let me know if my screen pops up here. I'm going to show Boeing. That seems to be dragging on the market this morning. Boy, if you were just inclined to just close your eyes and sell the open, 342.10 was your opening print, and you only took 22 cents worth of heat if you want to sell $5 in the hole. Now, it just came down to 338.50, folks, and I did mention that level when we were talking about the pre-market show. Nothing exactly at 338.50, but you had a low at 338.90, which we are currently trading at. But your next daily low here that you're looking for, if you want to see this downtrend continue, will be 337. But just looking at the dailies here, between 335 and 338, several lows in that area. You are getting a little bit of a bounce here off that. I mean, windfall for shorts here, obviously. Getting this kind of news, unexpected news. S&Ps, we did have that dip off the open. We went right to that closing price from Monday at 34.50, getting a little bit of a bounce. I can pull up the S&Ps here for you. Nothing special on the daily chart. Just quiet range yesterday. Just a couple tops ahead of that all-time high at 31.58. I got the daily here. And Sean, you got a stock. Let's talk about a stock here that you're licking your chops on, to say the least.
Yeah.
Give us a story here. Let's set up the technicals and let's talk timeframes.
Well, yeah. So this is, I've been waiting to buy this. I actually bought this after. In fact, I've traded this a couple times this year already. But one of the good trades prior was the lockup, and then just recently bought it kind of in that low 70s area. Caught a decent lift. I kept some. I'm building this position I think this is good. I don't know for sure, but I think this is going to be a feature position for me for the next year or two. So as far as technicals, the only thing they broke the 6310. 6310 was kind of a level it was trying to fight against. I mean, it's basically at or close to all-time lows. I mean, you can see it on the chart there. I think the low was around the first day of its trading. Maybe the second day it traded, I think, was around the low, or the first week. You can see them there in the left corner. You know, I don't really care if this goes down another $2 or $3 or bounces $2 or $3. I am going to try to actively trade this thing. But here's the beauty of this. And so this is kind of a nutshell of my whole process. So I've watched this thing I mean, I've known about this company as a pre-IPO company for a while. Watched this trading from the very first day. This was like a 20, 25 times sales company. On out year, well, even out year, it was probably 19 to 22 times. So that's pretty steep, right? Not crowd steep and not Zoom steep, but it's pretty darn steep. Well, guess what they've done? They've basically doubled their revenue base since they've been an IPO, or since they IPO'd. Companies roughly doubled in size. Guess what? Stock price, same spot. Last quarter, they did 60%, 59%, 63% net of currency. And look what they did. They sold it off. Now, I mean, if you can find me, and this is a challenge, you know, I'm assuming I'll be on next week, right? So there's a challenge to the listeners. If they can find me a cheaper stock on a relative basis, meaning a stock that's selling for a lower valuation with better growth, I challenge somebody to find it. I don't think it exists. I think this is the cheapest company at 60% growth, or let's just call it 50% and above, that I can find. So it's about 10 times, in fact, it's about 9 times forward sales now, out year. That's very attractive. They're not having much of a sales deceleration, a little bit. So anyway, this is kind of one of those things I can value a lot more richly. I can see this thing trading a lot higher. I mean, even at 100, which was a nice move off the IPO, this was one of the cheaper high growth stocks in my universe. So I like this a lot. I have no clue if it's gonna work in the next week or two. I do like day trading it. It's in a tight range. What I want to see is range expansion. This thing used to regularly trade on any given day. It could trade 3, 4, 5 points movement. So we'll have to see. I kind of don't want it to get stuck in a super tight range, which I don't think it will.
Oh boy, not much to say about it. I mean, someone has interest here at 62. I don't know if that's you, Sean, or somebody else.
I've been helping it a little bit the last couple days.
But 6202, that was your low on the 9th, and then 61.97 yesterday, 6202 so far today. I guess, you know, the positive thing, you can say, yeah, you got 3 lows in the same area. The thing when I see these kind of technical formations is I'm like, get away from here. Like, if this is really the bottom, if this is really support, then I'm gonna attract buyers at 62 and a quarter, 62 and a half, 62.50, push this thing into the 63 handle. So it's one of those situations where if you're trading in short term, which I know you're not doing, I mean, you know, you kind of got to get out of the way there. If that 62 goes, 61.97 was the actual low. I'm going back on the dailies here, and I would just look.
Yeah, I think it's either 59s or 60 even, I think was the all-time low.
Yeah, 60.78 would be your next daily low. And then I think 58.88, I believe, was your all-time low from October 23rd of 2018. I forgot to ask you, what the hell did they do?
They do a ton of stuff, but the main thing they're known for is, so everybody knows what Google does, internet search, right? Elastic is intranet search. So when you go on a company, let's say we're on an investor relations site and there's a search box in the upper right corner, right? And we're like, type in earnings or something. That's generally Elastic. They literally dominate search on internal websites. So a lot of companies use Elastic to run internal search. But what that's done is they're now getting into security. In fact, endpoint security. They're very good at M&A. They're getting into data logging. They're already in machine learning and AI in a big way, because you use the elastic stack to analyze data and do whatever people do when they code their machine learning algorithms and stuff like that. You need data feed sources.
Who are the customers?
Oh, geez, probably like 80% of the top 500 companies or something like that. Okay. And they have thousands and thousands of customers. Basically any company with an internal search application could be an Elastic customer. So very, very interesting company. Again, just a nice software. So here's the one thing they don't have. They don't have advertising revenue. I'm not saying they will, but if they were to, let's say, have an application that is almost like a bonus. So what if they branched out and started doing search in other ways for ad revenue? That would be a huge, not that they need more revenue because they got 60% growth, but there's things they could do that would really expand their total addressable market, which, by the way, their TAM is huge already. So very, very interesting company. I always like it when a really nice high growth company is effectively half the price it used to be on a relative basis.
Okay. All right, we'll keep an eye. We'll keep an eye on that $62 level.
Square, what do you got going here with Square?
Well, why don't you grab the charts back here from me? And I got about, I'd say 5-6 issues here that the chat wants to know Sean's thoughts on, and we can do this together as a team. I'll let you start out here. SQ hit a wall there at 70, tried to get into that gap area. I mean, it's been a ride up off the low, but it certainly hasn't been smooth sailing like it was before.
Hey, Jill, real quick, turn off your screen share.
You could just grab it from me.
Oh, it gave me a message I couldn't share while the other party was sharing.
Oh, let me see.
Yeah. I think it's because you have the master control of it here.
Try now.
I'm going to grab it here right now.
Spencer with the save.
All right, so you want me to look at Square?
Yes, sir. And I'll just tell you what I'm looking at real quickly for you. Whether you're short term, intermediate term, whatever, traders, better hold 64.68. That was your low on December 3rd. Today's low 65.04. So looks kind of heavy. I'm not really heading for the hills though. Or 64.68. I guess you got another low. There is some minor support here in the 64 handle, but when stocks make these moves through an area quickly, sometimes when they lose the momentum, they go down there through quickly too. So for me,
I think this is kind of a natural post earnings fade. They had a pretty good reaction. I think they went up almost $10 on earnings. So, not a big surprise that they're kind of seeing a post earnings fade, especially with some growth stocks selling off in the last few days and stuff like that.
Okay, so no immediate danger here.
I'd like the stock a lot better between 58 and 60. That's kind of my personal buy range on it.
Okay, let's stick here with some other fintech stocks here. Let's go to PayPal, PYPL.
This is one of those, I really like the fundamentals a lot. This could be one of these kind of consolidation candidates. So, stock roughly doubled plus over a few years. They were really, this was one of the cheapest fundamental stocks. This was like an Elastic, 2 or 3 years ago at $40. But honestly, given growth and given how well they've done relative to competition, you could make a case the stock probably should be higher. It's probably about the same valuation it was 2 years ago at $40, frankly. It's not a obscenely expensive stock by any reach. So this one's a little tougher. Right now I'm more looking at January Fed plays. I'm looking at really stuff that's really beaten up at the end of the year, but this will probably come back on my radar in Q1 of next year.
What about PAGS, PAGS here?
This is one. I got some trend lines here already. So this one, so it had the old channel, went way above the old channel, and then basically is coming down and creating a new really sharp channel. I don't think this channel here. Let me get a year chart. I don't think this channel can persist that long. But what this is an easy one. What happened is they didn't like the earnings from the last quarter. This was a very hot stock. It pretty much dropped down into the 35 area, and obviously all these buyers at 40 plus became tax loss sellers. So this is a very easy call that, look, you get out of December, this thing could have pretty nice bounce. This is kind of one of my January effect stocks.
Okay, and staying in that sector, STNE. I know people have
Stein. Other people call this Stone. I don't know. It's Stein. The ticker symbol is Stein. Yeah, this is a stock I've told subs I literally may, my view is I may never sell all of it. So, again, this is more, in fact, so this stock sort of trades places with PAGS. So when this is super hot, PAGS is usually cold. So kind of keep that in mind. When PAGS is hot, usually this one. In fact, I was buying this sort of in the 24, 26 area when PAGS was kind of hotter. These guys, I mean, I don't know if they've really had a bad report. I think all of Stein's reports have been good. They had just had another good report, kind of pulled back, didn't really pop. But this is like a 65 to 100% grower right now. This run reminds me a lot of Meli, MELI, which is a long-term kind of growth success story in that same South American region.
This thing's had a nice rally. Seems I'm looking at $600 stock.
Yeah, I mean this was 100 3-4 years ago. So
yeah, I have to pass on that one.
Yeah.
Chewy here, continuing to chew through the offers. We are trading up now on the session.
I mean, that's a beautiful move on that lockup.
That's a nice move. Yeah. Yep. People got stuffed on that one. And now the thing
that's what you call short covering. That's pretty much what's happening today on Chewy.
Yep. Waiting for the sellers to come in that didn't apparently have I mean, that doesn't mean they're not going to come in later in the day. It's just the anticipation of things into the open. For this one, kind of wide open area. I guess if you're looking for a longer term target, I don't know if you'll see this today. First things first, got to take care of 27.25. That was your October 24th high. What's the current high? 27.16. That's a little obstacle there, but bunch of highs at let's just call it 28.40. I see three highs between 28.21 and 28.49. So split those 28.30, 28.35. That could be another longer term target. That brief dip off the open here, our opening price for the futures today was 35.5. That was right at mid range, just below the close, just above Monday's close. Boom. They scooped that up here. Now we're attempting to challenge the pre-market high, 43.50. That's just right above the high from yesterday. Let's see.
Well, what's the deal? Was there like another positive trade news headline or something?
No, you know what I think? No, I think just like the Boeing. Dennis did mention a lot of sell imbalances when he was going through the imbalances early. And I think a lot of times when you see a lot of sell imbalances, the designated market makers like to take it down to a level where they participate on the opening print on the buy side to buy to provide some liquidity. So that's just a theory that, boom, they had these sellers. They want, if they had shorts on or they wanted to initiate a short-term long, boom, they helped with that opening print. The sellers were gone for it, and now just a little bit of a rally. So that's the only thing. I think people kind of freaked out about Boeing a little bit. That had that weighs on the Dow. That's still in the red. Opened up and made the low. You haven't taken out that early morning high yet at 342.32. So if you're trying to hold on to a short on that one, you definitely don't want to see that level go. What else did someone ask about here? Rob Hood. Getting a
Rob Hood.
Rob Hood is asking about Lattice Semiconductor. Really nice move from 6 to 18.
Huge winner.
Yeah, huge winner chicken dinner. It's consolidating. I mean, it's consolidating on the dailies. It's consolidating on the weeklies. It's consolidating on the monthlies. I guess that's a good thing that it's holding all those gains. Any
Yeah.
technical or fundamental thoughts on LSCC?
Well, I mean, this is I never did much on this. I had a small lattice position. I want to say 16, 17 on it. But, well, the whole story, just so, I mean, the bulls probably know, but this was like a poor man's Xilinx. So when Xilinx went haywire to the upside, Cadence has done very well too. That's CDNS. So these guys finally got the kind of the love that they deserve, because they put in a lot of years where they had a lot of design wins and good stuff was happening. And they didn't get much out of it. It's kind of that thing we talked about. Finally, how many good quarters do you need before the stock finally releases higher? So at some point, Lattice finally released higher and did so in a major way, and then kind of rode the back of NVIDIA and Xilinx. And so, I don't know. This one, I had valued this one time when it was about 6, 7. I had valued it probably like 13 to 15-ish. Now that was when they had a lower revenue base than they do now, but I would say it's probably a little bit extended on valuation. I'll take a look at this. I'll pop my model on this one and see and kind of see where my new price target comes out just for fun.
Okay.
I don't have a current level on this.
Let's are you heading over to Las Vegas for the Marijuana Business Conference and Expo?
No, should I?
No.
Should I fly over?
Yeah. It's going on today, tomorrow, and Friday. So I mean, these stocks have been down. Let's take a look. PYX was the one I talked about with you, but this is that hasn't stopped going down yet.
Oh, there's just the relentless tax loss selling, I think, on it. We'll see. Again, it had a run or two, but this is getting very cheap, and people forget. This is basically an old line tobacco grower, so the tobacco business isn't going away. So, this is how stocks act now. If there's no buyers, they just kind of keep going down. We talked about CGC and that beautiful little chart setup. That inverse head and shoulders is still kind of glaring at us, Yeah. And they had some news. I don't know if Tilray though. The Tilray is kind of a miniature version of POIX. It just doesn't seem to be any buyers. So in the absence of buyers, the algos just kind of keep pushing it lower.
Yeah. This CGC is interesting. You had that pop up not Morgan, Bank America brought this thing off its low, made a new low for the move at 1381, closed at 1532, and then they came out. I think they might have went from neutral to buy or sell all the way to buy, had a great run and got up to 2156. And then you had a little bit of your 50% retracement. I know I was figuring this one. I think it came in at 1764. Regaining its momentum here. 2168 was the high yesterday. Your other high was right at 2156. So if you really want another leg up higher on this thing, I think you gotta clear that high and close above it, I think, at least for a couple days here. But a little bit of momentum here going into the conference. Let me see if we got any other charts here.
It looks like it's the one pot name that the pot bulls are buying. It's in the only one currently.
Exactly.
Yeah.
Nutanix, NTNX. I know this one has been on and off your radar for a while.
Oh, yeah, it's been beautiful lately. Yeah, pretty good pullback. Look at where it is. It's right about to kiss the gap, right? So
How do you
that
do
was
that? Because my interpretation is it's going to fill the gap.
It could.
Yeah.
It could. I'm not so sure. I mean, it was a really, really good quarter. Still a very, very, it's probably in the bottom quartile of my software evaluation. It might even be in the top or bottom decile of my, there's only like Cloudera is cheaper than this.
Okay.
There's just not, off the top of my head, I don't have that many names that are cheaper than this name. So what it doesn't matter that's got roughly doubled off of lows. It's still incredibly cheap. I don't know, man. I kind of think it might throw a little move into that gap. I'm going to say unless we get a kind of a post December 15th correction or something, I'm going to say the next move on this. I think it's setting up as a possible buy, kind of a technical buy, right? A pullback buy. If you're long, stay long. I mean, I'm long. I'm staying long. My price target's $50, and that's a conservative price target. So,
Yeah. Okay.
we'll see. I think it might kind of sniff into that gap and kind of pull a head fake. That's kind of what I think.
In your Cloudera, found a seller, double top, 1144, 1145 after earnings, peeling back a little bit. Still like to see this thing continue closes over 11, but got to clear out that seller there at 1150 before you get another leg higher in Cloudera. I'm looking at Boeing here. You kind of had that flush out off the open, rebounded, still haven't
Little
taken out
bounce.
a little bit of a bounce here.
Little bounce.
So, I don't think the people, the intraday shorters are going to get too worried here until you take out that high, that current high made just off the open at 342.32.
Well, Joel, I got to ask you one here because I know we're only on for a couple more minutes, right? So,
Yep.
So Zoom is
Yes.
Zoom in your buy range yet?
Oh man,
I know you're getting tempted. I just know it.
I haven't done too well buying stocks I like the products of. Actually, I should have bought Apple when I bought the iWatch, and I've yet to buy Peloton yet here. But it's coming in. I guess my area that I'd be looking at here, give me like a look at. I'd like to see it breach the 60.97 low, with actually 59.94. I'd like to see it come down and like breach that area, and then hang down there for like another day or two, and then pop above it, and then use, like, let's say it gets down to 59.12 or something like that. Then the next day it goes to 58.80, but pops back up and closes above 60. I think that's because if you're still looking at this on a valuation basis, don't you? You still have a ways to go, correct?
Still very expensive, but again, this is a little kind of a miniature version of Elastic now. So look where the stock was. Look where the stock's back to. So stock's back to kind of IPO price, but they've roughly doubled in size themselves, right? They're roughly 100% grower. I don't know if they've reported 4 quarters yet, but for sure 3. They're gonna have another quarter that's gonna be just kind of like the last quarter. So hey, if a stock is doubling their revenue base and the stock price doesn't go anywhere, it does get 50% cheaper. So, but I don't even know what was this 70 times sales?
No,
I'd have to look. I think it's like 35 times sales now. So it's still one of the most expensive stocks. It's still one of the fastest growing stocks. So I still think there's going to be buyers. I don't know. I told you I haven't settled on a price here yet. I just don't know. But we forgot to mention this. Sometimes you don't have to try to buy a stock at a low. Just set a technical. I like the 5 EMA, the exponential moving average. So if you're buying a stock when it goes back above a 5 EMA, you might not be buying a low, but you're still getting pretty close to the low, right? Some people like to use a 10 EMA. In fact, I think Julian Robertson, or one of the old fundamental guys, still use technicals, and I think he'd like to see a stock basically get back above a 10 EMA. So whatever. I mean, I kind of like the 5 EMA myself, but so maybe, I don't know. I'll see. I'm definitely going to be watching this when it trades back above the 5 EMA. I don't know. I'll make a decision at that time probably.
All right, let's just wrap things up here. You had that quick flush out on the open with the sell imbalances. Made a pre-market low 29.50. That looks pretty safe for now. Intraday low just below your closing price of 36.50. We hit 34.5. That was also Monday's close, and you're knocking on the door here of the pre-market high. That'd be a good target here for early longs. Yesterday's high 43. Current high 43.50. Now the bulls are going to have some work to do here taking out that pre-market high 43.50. Things open up to the highs earlier for the week. So, Sean, today's the 11th, and then we'll do this again next week, the 18th.
And then take a Christmas break.
Christmas break, and then I'm going to be gone, and then New Year's break. So we'll just we'll get some feedback from people and see if they like us to just get some quick feedback now. If you guys like this extended session with Sean Udall, he's the CIO of Quantum Trading Strategies. Likes to talk technicals and fundamentals, which you need to be successful in this market. Thanks for joining us, and we'll talk to you guys next Wednesday. Have a good trading.
Always take care.